So ETFs or mutual funds, that's the pretty prominent questions that many people ask themselves when they first start investing. So what's the difference between the two, and which would be the better options? So that's what we're going to be talking about in this video. And welcome back to the channel if you are new here, and definitely consider subscribing and hit the bell notifications on to constantly you don't miss any future investings and personal finance videos like this one. So for the past few decades, mutual funds have really been the king in terms of the long-term diversified investments. But recently, exchange traded funds, also known as ETFs, have really gained a great deal of the popularity since the turn of the my millennial. So let's first talk about the difference between the two, because they certainly do both have the proofs and cons to them, and you definitely won't be aware of the before you invest your money uh, anywhere. So each you have some mutual funds. They can both contain the same exact finance assets within those specific ventures. So you can have an ETF that holds the exact same assets as the mutual funds. There's the few different factors that decided whether it is the mutual fund or if it is the ETF. So ETFs are consistently changing in price throughout the day, as the different stocks and the bonds within the annual investments fluctuate every few minutes, but the price of the mutual funds typically only varies on the daily basis. So one of the great difference between the mutual funds and the ETF is also going to be their legal structures of the investments. So let's take a look at how they differ and where they sort of compare. So in America, there are three primary legal structures on the ETF, and the first one is going to be the exchange trade open and index mutual funds, and it's pretty common to see this one. And what I would typically happen is that the owner of the fund, when we invest dividends throughout the quarter as they go, and then pay out those dividends in the cash to their shareholders at the end of the quarter. And then we have something called exchange trader until investments trust, also known as UITs. And I don't want to get too technical here, but UTI pays the interest incomes on the bonds, and then bonds portfolio until the specific time when the bonds are actually sold, and then give it back to the investors. So this is the great because bonds investors can own the diversified portfolio of the bonds in UI terms, rather than having the mortgage investments payments and bonds redemptions on their own personal broker's account. And so we also have something called grantor trust. And I don't get too technical into this, but essentially it's pretty similar to closer Android fund, and you actually own the underlying shares within those companies. So you should have full options, right? And they are the types of the shareholders' benefits as well. So those are the main three structure of the ETFs. Now with mutual funds, we have either open-ended or close-opened funds, and you may already be aware of the difference between these two. So we are not going to jump too much into those, but especially an open-ended fund, they can continue to release more shares to the publics, whether a closed-end fund they can't do that. There are a couple of other differences between the two, but that's not something that we are going to cover in this video. So let's get into the expenses, which is probably gonna be the put that you're gonna care about the most. You know which one gonna cost you the most in fees over the long run. So in the general consensus is that ETFs has the lower expense ratio than the mutual funds, and it is after the collecting data from the thousands of the different funds throughout the United States. We can really see that expenses ratio for ETFs is about 0.6% on average, and the mutual funds is going to be about 3%. Now there is the big bounce for ETFs, and that's they don't charge a loan. That's probably gonna save you a good deal of money, because typically we will see a lot of mutual funds turning charging some type of the load through the process, and so I would say that in general ETFs are probably more friendly in terms of the fees. You might not save a ton of the money you with them, but it's probably gonna to be some money, because you're probably not gonna have loans to them, and in general on average they will have lower fees, and that's we're going to be case by case. It's not like every ETF is going to be lower in terms of their expenses ratio that the mutual funds. So you're going to have to take that case by case look at each one before you actually invest into it. But that's just the general idea behind it. So as far as the taxes go, ETFs typically will have more advantage than the mutual funds, but the difference is not going to be astronomical. But there is definitely some reasons to believe that certain ETFs could save you money on the taxes as compared to the mutual funds. But as always, this is going to be case by case as well. So hopefully I will remember to do this, but I'm gonna try and link up a website that explains the tax advantages of the ETF, because if we go down the rabbit hole of the taxes right now, we might never come back. Whole the taxes right now, we might never come back. To be like the 10-hour videos, so I sort of like to think about ETFs, sort of like the stocks, because the price are always fluctuating throughout the day, and you can typically get in and get out of them pretty quickly. So as you can even sell them short, for example, whereas mutual funds on the other hand are typically a little slower in the transactions process. You are not going to see people buying in and buying out of these funds on the frequent basis, and really you shouldn't see massive swings in the trading volume within ETFs then, because I mean most people are investing into them for the long term, but it is a lot easier to buy and sell exchange trade funds on the within basically, and some people who can try to day trade some of these ETFs as well. So with all this being said, where I stand on these funds, which one I do think would be better options for somebody like myself. So I'm gonna to be honest with you, I have both the mutual funds and the ETFs, but I generally gravitate towards ETFs, as I probably just explained some of those profs of ETFs in this video, but I really can't stress this enough that it's really important to look at this on the case by case basis. So not all ETFs are going to be superior to the mutual funds. That I think if someone was starting with say $200 on the ETFs, it might just be a more valuable option, since you can easily buy and sell it. There's generally not one loads or minimal amount to that you need to invest into these funds. One more thing that I haven't yet mentioned is this video that you're like want to consider the ability for the ETFs to survive. So it seems like a lot of the ETFs these days are really just popping up everywhere, and I think it's important to kind of just take a look at the ETFs and say like is this actually going to be sustainable, because I'd like to invest into the Vanguard funds, for example, and Vanguard managers trillions and trillions of the dollars. And so I know that their funds will be around probably 3,040 years from now, and there is going to chance that those funds will be in existence. But sometimes you see some of these funds, and it's going to happen with mutual funds as well. But a lot of ETFs popping up out of nowhere, and you just sort of what to guard where it's going to be the sustainable fund. And so I think that's about it for this video. I think I made all the points that I needed to make here. ETFs, mutual funds, they really not that different. They can hold the same exact assets, but ETFs generally I will gravitate towards them just because of the few different things. We can save a little bit of the money on the access and whatnot. What I say for this video, guys. Thanks for much for watching, and I see you in the next time.